Hello, this is a tradesight market recap video. Thanks for listening using eSignal 11. I wanted to talk today a little bit about some of the action we saw this week, especially on Thursday and Friday. This is the week ending January 24th, 2014. It was a short week because of the Martin Luther King holiday on Monday, and so we only had a 4-day week. We're also in the middle of core earnings. We talk a lot about how core earnings are just a different environment for people. I like to put market action in perspective a lot of times because there's certain types of sessions that are not really ideal for us from a trading perspective. And when you're in the core 8 days of earnings every quarter, a lot of times you don't really get the types of trading environment that you like to see because so much of it is rumor driven, and then you get big gaps in the market related to reactions to the various comments looking forward in the economy that you get from all the different earnings releases. And so there's certain types of days where I'm just never excited to see. And my least favorite type of trading session is the gap and go trading session. And I want to show you a little bit about what happened on Thursday and Friday, walk you through the trading day. You may hear some loud noises as my alerts go off. I'll try not to talk over them. But here's a look at the ES. This is at the end of Wednesday. So you've got basically Wednesday's action is from right here to right here, and then prior to that was Tuesday's action. These are what we call our futures levels. Okay, so these various lines that you see, and these are for Thursday's trading at the moment. So this is what we're going to use for support and resistance levels in the market coming into Thursday. The shaded area is what's called a value area. That's between the light blue lines. We've got the pivot series in dark blue. For those that are familiar with that, we've got the lower break level. That's a GAN level we use. The purple lines are of note here. They're called the pressure thresholds. And so whenever you get a gap in the market, one of the things that happens is 80% of gaps fill the same day that they occur. So for example, if you look at this action here on Wednesday, the market gapped up and then pulled back and filled that gap from the close of Tuesday. Okay, so that's called a gap and fill. And 80% of the time, gaps will fill on the same day. What's interesting is that we have a tool that sort of gives us an indication of when a gap might be too big to really go back and likely fill. And so it may fill at a later point in time, obviously. But anytime the market gaps past the pressure thresholds, which are the purple lines, it becomes a little less likely that it will, actually a lot less likely that it will fill, and a significant gap beyond those levels. Now, in this particular case, the pressure thresholds are only 3.5 points apart because the action on Wednesday was so narrow. The whole day was basically a 5-point range, which is unexciting. That's also common in earnings season. Everybody's waiting in the first few days of those core 8 days of earnings. They're waiting to get more feedback from the companies that are reporting, and there's not a lot going on. You get rumors that move the market late in the day ahead of some of the earnings releases, but that's about it. So these pressure thresholds are really close together here. But we came into Thursday morning, and I'm going to move us forward a single bar here. We came into Thursday morning, and look what happens. We get this gap down. We knew the futures were going to open down here. They were showing it pre-market. We're well below not only the purple pressure threshold line, the lower break level, which is a key GAN number. We're below S1 and S2 on the pivot series. And in fact, in the opening 5-minute bar, we touched S3. Okay? And that's a big gap. Those are the types of gaps that don't tend to fill the same day. And unfortunately, then what you get is a gap and go session. Now, the problem with gap and go sessions is that even though it looks like the market made a big move, and we can certainly make money if the market goes up, if the market goes down, the problem is that a big piece of the move is the gap. So here's a gap that's about 10 points in the market on the S&P. And let's just see how the day plays out. So it goes right through the S3 level. Now, a lot of times when you have these pivot series numbers and all the other levels that we show and how we work off of, the market uses them very specifically as support and resistance points. But when you get a big gap like this and you're in the middle of earnings season and there's less people actually trading technically, you'll notice here that the market for the most part is not using these levels. Okay, it's pretty much ignoring them. And so here we drifted through S3. Now what's interesting from a setup perspective, and we did make a little money eventually on the futures side here, is that we came down and hit S4 exactly. I don't remember the last time we got to S4. Keep in mind though that the pivot series, which are these S2, S3, S4 numbers, it's a little narrower, they're a little closer in than usual, even though this is a big move. To get to S4 is usually hard. They're closer in because the range on Wednesday was so small. Okay, so we did come down and actually address this one level. But the problem is when you're looking at all your stock trading in this environment, everything's gapped down so big, which means anything you were looking at on the short side probably gapped past where you wanted to short it. Obviously, if the market gaps down and keeps heading lower, less likely that you're going to have any long or buy ideas that are going to trigger. And so you really get kind of disrupted, and looking for intraday patterns is tough because there's no pattern if you just gap and keep going. That's the problem with days like this, is you can end up with big moves, and you see here we get a little bounce, and I'm going to walk you through the rest of the day really quickly so we can also get to Friday's action. Okay, here we finally swept the S4 level. Now that was over lunch, and then we broke it more significantly here. And you're seeing a green line come into sight here at 1812.50. That's what we call a tri-star level. That's like a magnet point for the market. And we got down pretty close to that. We didn't actually hit it. There was another tool that we had that gave us an actual signal right here on at the low. If I could populate that really quick, let me see if it's lined up on my chart. There's the Comer. This is what's called the tradesight Comer tool. So that 13 that you get is the buy signal, and these this pink line's a risk line. We bounced right off of that, so that kept us from getting, and that's one of our most important tools because it is such a strong signal. It gives us another futures trading opportunity, but it didn't quite get to the tri-star level because of that. Now I turn that back off so it doesn't cloud up the picture here. Let me see the rest of the day here. Let's just get us to this dashed line, which is of course the close of business on Thursday. So there we are. Now what happens is as you move forward, now we're going to go to the next trading day, and what happens is I'm going to show you how the levels adjust when you go to a new trading session. So right now you're still looking at the levels for Thursday that are based on Wednesday's action. We ended up closing near S3. Not a lot of great technicals. Volume was high late in the day. Again, rumors flying about stocks reporting after the bell. Now let's take a look at this. So here's the new levels based on Thursday's action in the market, right, for Friday. Now, I want to show you what the first bar does on Friday. And see, in this case, what you'll notice is because we had bigger range on Thursday, these levels are more spaced out. So, for example, the upper pressure threshold is the purple line up here at 1832. That's 8 points above where we ended up closing on Thursday. And the lower pressure threshold was actually the same number as one of these other lines that you're seeing right here. So coming into Friday, the lower pressure threshold is actually 1806.25, which is the same as this S2 level right here. Okay, so what's the first bar do for us on Friday? And let me show you now. Here's the 5-minute bar. Okay, now in this case, the key is going to be watching that 1806.25 area because that's the pressure threshold. We didn't gap below it. We did gap below the lows of the day, though. So there's new energy. There's new things happening. And let's watch how the market reacts as it starts to trade. We do start to push lower. We get straight to that S2 level, which is also the lower pressure threshold. So here's your question. If you hold this almost immediately, it becomes more likely that you're going to fill the gap for the day. But if you don't hold it, you're going to have problems as you move through it. And so we made an attempt to hold it there early. Sideways action, and then rolled over, tried it again, and now look, we've broken it. Okay. And so this gives us a lot of information about, at this point, the odds of this thing coming back and filling for the day are not very good. And we never even went above the high of the opening bar, okay, which would have been to that 1825 key tri-star level. So back to back, you're ending up with what we call gap and go days. And there's a new low in the futures. And I'm just going to take this all the way forward at this point in time to late in the day, which is where I'm recording this right now. As they came back from lunch, guess what? Does it recover? No. New lows. New lows for the session, and now we're all the way down to S3. Isn't that amazing? Okay. So this is the problem, is when you get these gap and go days, it becomes very difficult to spot entry points in both the stocks and the futures. You're not using the key technical levels as precisely as you usually would. And so unfortunately you end up with a scenario where a lot of people think, ooh, I should have this big trading day because the market moves so much. And in reality, from my perspective, I had a big trading day because of an individual stock that had a really nice pattern on the daily chart, and we tend to focus on that. And it ended up being a little $7.75 stock that ran a couple points on a lot of volume. But other than that, in terms of spotting new entry points, let me show you that stock really quick. Here's the ARIA. Okay, this was the breakout. We had a trigger on this thing to go long buy it above 775, which is this high of this base right here. So we've got kind of a cup and handle here, sort of broke out, held above that. Then we break out again and end up running from 775 to as high as almost $10 intraday. Okay, and so really that very nice pattern that somehow managed to trigger early on, about 10 minutes into the market, before we knew whether or not we were going to head up or down from the opening print, it still takes us, it still ends up being a nice move for the session, which is a strong technical move and the type of pattern we like to look at. But in terms of the rest of the day's action, it's hard for me to get interested in the market on days where we're getting these gap and goes, and that's just the reality of trading. Some days are going to be better than others, and I prefer very clean trading days where I'm going to put my effort forward. And if there's anything to be learned from a day like today, it's that, once again, as we like to point out, these types of sessions are more likely to occur in the middle of core earnings, the 8 days of core earnings, which started on Tuesday the 21st, and is going to go all the way till next Thursday the 30th. Okay, and especially the Tuesday, Thursday, Friday each week. Those are the core 8 days. Markets behave very differently during those 8 days, and that's the most likely time where you're going to see gap and go sessions, which are not nearly as fun to trade. Have a great week.